Most traders spend years trying to get consistently profitable. They buy new courses, learn new terminology, and constantly switch strategies, only to find themselves stuck in a loop of second-guessing and endless market noise. When you look closely at these struggles, the root cause is rarely a lack of intelligence. The issue is the assumption that getting good at trading requires accumulating more indicators, more timeframes, and more complexity. Today, we are going to fix that. We are going to build your personal simplified trading protocol, a concrete system designed to cut out the excess noise and leave you with a clear, repeatable process. Before we begin, you need 3 things. Open your charting software, pull up a blank document, and put aside any pre-existing opinions you have about what works in the market. The traders who improve the fastest are the ones who can strip away their biases and approach the charts as if they were starting completely from scratch. Step 1 is cleaning up your workspace. Go into your charting platform right now and delete every secondary time frame, every overlay, and every indicator that is not absolutely essential to your daily execution. Look at this before and after split screen. On the left, we have a chaotic setup where price action is buried underneath layers of colorful indicators. On the right, the chart is clean, showing only candlesticks and a single trend line. You will likely feel a psychological resistance to deleting your favorite tools. Keep in mind that complexity often feels like progress, but it usually just gives you more things to overthink right before you take an entry. Removing those visual layers leaves no room for debate. You see a clear setup and you take it without hesitation. Once your chart is clean, you need to implement the 1-1-1 rule. You are going to define exactly one instrument, one specific time frame, and one precise entry setup. Go to your blank document and write those 3 choices down. As you see on this digital notepad, you are locking in your constraints so there is zero ambiguity about what you are looking for when the market opens. Bruce Lee noted he did not fear the man who practiced 1,000 different kicks, but the man who practiced one kick 1,000 times. The exact same logic applies to your trading. Splitting your focus across 10 different instruments guarantees you will master none of them. Hyper-focusing on a single setup allows you to develop deep, automatic pattern recognition over time. Now that your rules are set, you have to test them. But before you risk real capital, your simulated practice environment must perfectly mirror your actual financial reality. A common mistake is paper trading with a massive default account balance that you do not actually possess. Look at this settings menu. You need to immediately go into your simulator and delete that default 6-figure balance. Replace it with the exact starting capital you will use when you eventually go live. While you are in this practice environment, you must adhere strictly to the 1-1-1 rule. Do not strategy hop and do not tweak your risk parameters. Your brain does not separate simulation from reality. If you practice with sloppy risk management in a demo account, you are actively building the exact habits that will destroy your live account later. Step 4 is building your data engine. This is a comprehensive trade journal where you will log the details of every single action you take in the market. For every trade, you need to record the exact setup you recognized, your entry criteria, how you managed the position, and the final exit result. This dashboard illustrates the power of logging your actions. When you put your historical trades side by side, specific objective patterns emerge, like discovering you have an 80% win rate for a 3-touch trendline break on Thursdays. If you do not rigorously track these variables, you are trading in the dark. You have no objective way of knowing which market conditions are actually working in your favor. Your actual edge in the markets does not come from a secret external strategy. It is already sitting right there inside your own unanalyzed trade history. At some point, the market will put a mirror directly in front of you. You will face a severe drawdown, a string of losses, or a trade you refuse to let go of, and it will trigger an intense emotional reaction. You need an if-then rule designed to trigger automatically the moment you feel the urge to revenge trade or deviate from your plan. Look at your protocol document and add a final rule. Write down a concrete action you will take to disrupt that emotional spike, such as walking away for 24 hours after 2 consecutive losses. Traders who are completely blindsided by natural human emotions will often spiral and blow up their accounts. Having a coping strategy already in place prevents a single bad session from erasing months of progress. The better you get at this process, the less time you spend analyzing the market, and the more time you spend analyzing yourself. You now have your completed system, a clean visual chart, a defined 1-1-1 constraint, a realistic practice environment, an active data tracker, and a mental failsafe. When the fog lifts and you strip away the excess indicators, narrow your focus, and track your actions objectively, the confusion disappears. You are left with a single, clear pathway to follow. Implementing this exact structure allows you to bypass years of circular frustration and focus entirely on mastering the execution of your plan. If you want to see exactly how I apply this framework to my own trading model from the ground up, click the link in the description to join my free masterclass. Subscribe, hit the notification bell, and start logging your trades today.